Hello traders and welcome to this live intraday strategy webinar. Today is Thursday, October 6th, and we have NFPs on tap tomorrow, so we'll have a quick NFP update. Good to be with everyone here in the room. Adam, Dan, Eileen, Graham, Kelly, Mark, Simon, Steve, Trevor. It's good to be with you guys this morning. So the dollar making another run into the highs here as we look tomorrow's non-farm payroll review. Obviously, we'll take a quick preview of what the numbers are expected to show, and we'll go through all the dollar crosses. I do want to just take a quick look at the setups from yesterday, which doesn't include any dollar crosses, save dollar yen, and then we'll go ahead and go through the dollar majors. So questions, trade setups you want to review, feel free to post them on the message board. Good morning, Michael. Hope you're feeling better today. Thanks, Eileen. Figured once a currency made the news, fade it, but it seems everyone's jumping on the sayonara sterling. I wouldn't necessarily jump on board still, Eileen. Pound yen, we'll go over that early in the session, is still above support, and I think if we come into the yearly low day close, that might be a decent entry. Pound... Or let me take a step back. We're also looking at Kiwi CAD, something I highlighted yesterday. I was in a trade on that. Got stopped at break even for the rest of it, but I still think it's a viable trade opportunity while above the 100% extension, so we'll take a look at that. Obviously, Euro, Aussie, Sterling, and Yen are still going to be on the table for tomorrow. Hey, D, thanks for that. Good morning. Hope you're feeling better today. Yeah, slowly but surely coming back. So I appreciate all the concerns and well wishes, guys. All right. Do keep in mind, we do get the release of ECB minutes earlier today. There was some commentary from Merkel overnight in which she said essentially more or less to break it down, trigger Article 50, then we'll talk as far as negotiations for new trade deals with the UK. You are seeing the pound take a little bit of a beat down on that, but still, again, some of the key crosses that we're looking are not really invalidating any major levels just yet. We don't want to just fade it blindly, but certainly we'll be looking for some support heading into the U.S. trade session. All right, so let's jump right in. Relative performance for the greenback looks like this as we start the U.S. session. You see that the dollar is stronger against all its major counterparts so far in the session. Biggest loser, obviously, British pound, almost down 0.9% so far in the session. Aussie with a nice pullback, finally materializing down 0.66. Kiwi down 0.39. CAD and Euro kind of limited on the losses, specifically on the CAD, still kind of hovering. I don't really have much to do with this, although it was an interest earlier in the week, but we'll touch base on CAD as well. Looking at price action, here's what the DXY looks like, the ICE dollar index. It looks like, again, we're making another attempt today to break this key resistance barrier near term, 96.24 into 96.44. You can see we've made 3 failed attempts on 3 separate occasions. Today's close will be paramount. And you still do need to contend with basic slope resistance dating off of the December high. So I just want to highlight that here. Even if this does stretch higher and we do get involved on dollar long positions, there's still a barrier of entry just higher. So watch that trendline resistance. Today and tomorrow it comes in just ahead of the 97 handle on the ICE dollar index. What would validate a reversal in the index would still need to be a break below this region. You have last month's open, the 200-day moving average, and certainly a nice pivot in price here, last month's opening range highs, a whole bunch of stuff. The former slope that we were working with here, which has gotten some really nice touches. This is the region we need to clear below to get the reversal confirmation for the dollar index. As far as the U.S. Or the Dow Jones FXCM dollar index, that's already come into the next topside support or resistance target, 12,061, 12,070. Again, NFP's first week of trade, guys, don't get suckered into trying to chase these moves. The best trade that I think you would have seen versus the dollar, obviously aside from the short sterling position, was also the short Aussie position that we talked about earlier in the week. So we'll discuss that as well. But we're not going to take this as a carte blanche versus the dollar across the board. So from here, the HDC, or the high day close for July, comes in just higher at 12,102. Near-term support now comes in at former resistance, 12,014. So a little bit of a different picture, but again, keep in mind, this is equally weighted index for the Euro, Aussie, Sterling, and Yen, where the ICE dollar index is much more heavily weighted the Euro. Now, yesterday here in the webinar, I know that Jamie in his webinar, the midweek strategy webinar, also went over the divergence that we're seeing as far as the euro dollar and the dollar index, with the dollar index obviously pushing into a new high and the euro dollar failing to push into a fresh monthly low. That still exists, and that indication or that technical sort of event is still something that we want to pay attention to. Okay, and specifically as long as the euro holds that 11,040 level, you're going to want to use some caution there on chasing that dollar advance. Any questions on the dollar index, the ICE dollar index or the DXY? Okay, so let's take a quick run through the report from yesterday. We'll go over some of those setups, and then we'll jump into the dollar crosses and really take a closer view of what we should be expecting heading into tomorrow's non-farm payroll event. So dollar index number one. Number two, let's jump right into Kiwi CAD. So look, this is one of those trades. Again, it's in a downtrend. We're playing the reversal. I'd rather be short. But we're coming into a big area of support. So yesterday I did take a small long position. Actually, it was a decent sized long position off of the yearly open on a near-term trigger. I was just looking to play a near-term rebound here. The support region still extends down to 94.09, which would be two equal legs down, 100% extension off the high. So I still think you could get a little bit deeper of a drop, but the trade idea remains viable while in this region for a near-term rebound to try to get back on the short side. Ultimately, we're looking for a drop down to 93. Now, a really interesting setup. I know that Jamie also brought this up in yesterday's webinar. Just want to take a closer look. I spent some time with this chart last night. Some really interesting parallels were identified. First of all, if you take basic slope support just off the low for the year that we made in April, okay, take that slope support and show some parallels. Resistance, resistance, support, support. Extend that off the high from March. Resistance, resistance. This also tells you something. Even if you don't get a reversal on it, the fact that price, when it did go through, ran. Right? We didn't just hover above or hover below. Every run through this level was really basically a breakout. Resistance, support, support, resistance. Now, if we take that slope and extend it off the highs from July, you could see a gap here. Okay, and again, this tells you exhaustion. This is the definition of exhaustion, guys. Not only did you stretch into a high that just missed resistance and pull back dramatically on that stretch, the entire time you were getting divergence in momentum. Higher highs, higher highs, higher highs, a series of lower highs. That divergence inevitably gave out into a clean support trigger break, and that was all last month. So now looking at this on a broader view, this near-term decline is coming at some interesting areas of support, i.e. the 2016 open, you see highlighted here in magenta, and that 100% extension at 94.09. So this region may be a region where you might find a little bit of a rebound. Just highlight that for you. Right here. So I'm personally looking for a little bit of a rebound. I don't want to chase shorts here at all. If we get the rebound, again, I'd like to be on the long side near term, inevitably looking to sell that. The bearish, invalidation level is going to stay with the July high, which is also confluence resistance with basic channel resistance and a longer term slope. If I bring this out, guys, a basic trendline resistance extending off the highs from 2014, specifically in March. You can see that we turned ahead of it last December. We tagged it back in August. Really messy, but false break to the upside here. That trend line also coincides on the July high right at 95.53. So that's going to be the sort of invalidation level for the near-term downtrend, inevitably looking for stretch into 93. Here's what the scalp looks like. And here's what it looked like yesterday. Okay, so again, I had a long position off here. Let me show you what that looked like. Kiwi CAD. Whoops. Okay. Okay, so here's how I kind of played this yesterday. On the initial approach, I kind of got stung. I was a little too early on the entry, and I did take a 12 pip stop here on the full allotted amount, which kind of stung. I literally got stopped out at the low. So again, playing it a little bit too tight to the chest there. Bottom line is, as soon as I saw this recovery and rebound, you saw some really strong divergence in momentum. This is a 1-minute chart here. Let me stretch that out for you a little bit. Okay, so some strong divergence in momentum, and you even had a decent trigger break right here on the reversal. So for me, despite the fact that I had just gotten stopped out for 12 pips at the lows, you had a clear-cut trigger to the upside just a couple of minutes after, and it was worth a stop. This was a much better entry because the stop was clearly right below that low. So I was basically working with another 12 pip stop. So it worked out pretty well. It started to peel a little bit off as we got into deeper into Tokyo trade. Once we started heading back towards the session highs for Sydney, I kind of peeled off. Remember, a quarter of the daily ATR is only 22 pips. I think it was at 21 last night. So I took off 3/4 of the trade, put the rest at break even, and inevitably that triggered early in the wee morning hours here in New York. So post this, play, you actually had a decent rebound again before this thing broke lower. Now here's that 100% extension, and this entire range, I do still favor a near-term rebound here in Kiwi CAD. Now, keep in mind a couple of things. This is counter-trend trading. As I noted yesterday, this was an objective break of the weekly opening range, so inherently we should be looking for a late week low. It's Thursday. I think you could mutter a little bit lower here into U.S. trade, but I think the risk remains for a rebound off this region still. Ultimately, if we get a rally towards the median line, I'd be looking for short entries, or if you get a break below this structure, you look for the zoom and retest and another entry on the short side. Does that make sense, guys? Any questions on Kiwi CAD or how we played that or what we're looking to do from here on out? Trevor says, Mike, is that 20 period for your RSI oscillator? Usually, I go between 20 and 14. 14 is a little bit more structured as far as like time periods go, Trevor. I usually keep with 20 period moving averages on the daily charts, kind of just like a monthly moving average or a monthly RSI read. But the tighter the periods are, so when you bring it down to 14, it tends to give you a little bit more picture on what's happening in the near term. Where if you stretch it into the 20, it kind of smooths out RSI a little bit. So I'll toggle between the two, and this has sort of been my issue for a while. For those of you who've been knowing me or have been trading with me for a while, I'll typically, some charts will have 14, some charts will have 20. I really look at what's giving the clear indications, and the things I'm looking at, Trevor, are two things. I want to see which one gives me the better reversals and plays off of 60 and 40, those levels in momentum that we like to use to kind of gauge near-term directional bias. And I also want to see which ones are clearing me which ones are giving me the clearest trigger breaks. So resistance triggers, support triggers. Sometimes you got to fidget with it a little bit. So I would say play with it a little bit, guys. Sometimes certain assets or certain pairs will actually work better with a 14. Some of them will work better if you smooth it out with a 20. On a pair that's a little bit more volatile, like a pound yen or something that has a wider ATR, those I'll tend to bring out to a 20, Trevor. But on average, I think 14 is sort of just the standard. He says, okay, cool, thanks. Was using 14 so far. Cool. I mean, if it works, it works. I don't want to necessarily change your behaviors, but again, we're not going to be stressing specifically RSI on any single trade. Remember, right, this is just an added tool to help us indicate directional change in momentum. Never really want to stress an indicator. Questions on Kiwi CAD? So levels remain unchanged, looking for signs of exhaustion on a rebound again, a rally towards a break of 94.60, which is where we booked a little bit of that long yesterday, is basically this pivot here, the lows from here, and the Asia and London opening range highs. So I'm actually going to highlight that for you right here as near-term, in-term resistance. Here's what it looks like on a 4-hour. Okay, that is Kiwi CAD number 2. If there are no other questions on that, we will move on to Pound Yen number 3. Here's what Pound Yen looks like. So I also highlighted briefly this setup on daily FX. Here's what the 2-hour looks like. Let me show you the daily chart first, kind of where we are in the broader scheme of things first. So the premise of the idea from last night was, again, look, this is a rally coming off of big support, but it's at resistance. So the immediate focus is at risk, or the immediate topside rally is at risk for a pullback. You look for that pullback to find some more meaningful support. I'd like to stay constructive above the low day close for the year, which again is 130.96, 130.97, we'll just call it 131. So I'm, again, as per your comments earlier, Eileen, with the Sayonara Sterling trade, I don't think we've gotten that yet, you know? And as these commentaries with the whole Article 50 and the Brexit, you know, these, how do I say it? These events and these commentary guys are not necessarily bearish. They necessarily will charge volatility, but you know, did we really learn anything from Merkel's comments? Does that really mean anything for the pound specifically? Okay, large implications, market uncertainty, sure, you might get an initial reaction off it. Guess what? The trade was at resistance anyway. So for me, I don't read too much into the commentary, into the headlines. The trade was coming into basic trendline resistance off the highs from last month. If we take a look at the near-term chart, which is kind of the only thing that's telling at this point, we had this long-standing multi-week median line formation that we've been following from the highs of September. Even within the confines of just the near-term advance, some slope, okay, off the lows. Extending off here for median, resistance, resistance, resistance. And also last week's high and a nice pivot in price at 132.28. And like I said yesterday, that's the level we need to get for the breakout play. You'd be looking for 132.88. That's a soft target just on the near-term advance, but really 133.30 is what you need to clear, and that would validate a large-scale reversal in my mind for pound Oz targeting 130, or for pound yen targeting 135.30 up here. So all we're getting here, Eileen, is just a setback off resistance. You know, I'm not getting increasingly bearish just yet. You know, near-term support 130.96, like I said, the low day close for 2016. If we close below the monthly open 130.67, that changes things. I think that's that's when we start to look, Eileen, at this being a sayonara trade. Forget about it. But as long as we stay above that, I know, you know, I got no problem trying to fade some weakness here in pound yen. Does that make sense? Technicals over sentiment, Eileen. Yeah, and you know what? I kind of work when we work with them in tangent together, right? When we see excessive sentiment on one side of the trade or the other, like all these headlines that are saying, "Oh goodness, look what Merkel said. What's the UK going to do?" Yeah, I mean, sure, sterling was at resistance. Yeah, let's get a pullback. I don't see the big deal. And this is where you can argue, well, the fundamental will make this thing reverse, or is it because we're at resistance? What came first, the chicken or the egg? Doesn't matter to me as long as we're able to identify it. So look for some support coming into this region heading into the U.S. Open. Again, the break above 32.28 is still what we need to get to validate a larger scale push higher here in pound yen. Here's what the 1 hour looks like. And you actually have a little trigger here we can keep an eye on as we head into the U.S. Open. Comparing sterling dollar to sterling yen, sterling dollar is below month open so far. So also was considering the sayonara thing. So let me take a quick segue here. We can do that. Number 4, we'll do pound dollar real quick since we're talking about the pound. Here's what sterling looks like. And, you know, I would equate this not necessarily per se to sterling weakness as much as the combination of the two, Eileen. which is why you're seeing this be a little bit more of a precipitous drop here. Obviously, as we said earlier, the sterling or the dollar is kind of ripping versus everything today. But even if, we're still in the confines of this formation, we're just checking the lows now. And even if it breaks, let me take a look at the daily chart real quick. I see what you're talking about. Yep. Let me just take a slope off that. Yeah, this thing certainly looks real hairy here, doesn't it? You got something breaking to oversold condition. The last time you saw that was right back here, which was a spill into the lows before recovery. On the open of the week, yep, Harry, says Eileen. Yeah, I see what you're talking about with pound dollar. Again, I'll sit on the sidelines here. I'm not going to advocate jumping into a short on pound, even though we're at fresh monthly lows. Let me put in the monthly open break here. I actually haven't traded this since the start yet. So let's highlight that. Hmm. You got me all interested in this right now, Eileen. Seems not much support under it for sure. Yeah, I mean, from here, I really don't have anything on tap until like down into 124.50. No matter how you slice it. Let's see if we could just clean this up a bit here. Okay, so a possible slope there, and if we bring up the 50 line, I suppose it won't be too far. Okay, well, right there right now. All right, so let's see here. If that's the play, a lot of times the extensions off those same reference points will give us okay, the 1618 is way out of range. Yeah, so even if we take a near-term extension just off those reference points, actually it still highlights the same region down here. I'm going to take it off just for the sake of keeping the chart clean, but you get the picture. Yeah, Eileen, look, this is either going to be a false break scenario and it's going to wipe out, clear out some of those weak hands before it rips face, or you're going to get a precipitous drop into 24.56. If you get the drop and the sell-off, there's nothing in it here, guys, for a near-term trader. This is where traders get chopped up, either trying to call the low or just jumping into a trade on the short side with no concept of stops, and then on just a back and fill, they get ripped out. They get ripped off. So, we need to recognize where our strategy is going to be the most beneficial. If you're not already short here, I wouldn't be looking to chase this. That being said, Eileen, I still think you're at near-term support here. I still think this doesn't necessarily change anything. We're still within the confines of this descending channel. We have to see what the daily close looks like, right? This looked like a break before, obviously tagging that 27.97. We closed that day at 29.26, and then we ripped face for the next 5-6 days. So just keep this in mind, okay? Likely to see a drop and maybe another spike lower into the U.S. trade session, try to fake out some more people, but I wouldn't be looking to trade this on the short side. Pound yen to me, I think, is a little bit more, what's the word? It's respecting our technical levels a little bit more, A, and B, The same type of analysis that we were talking about earlier with the euro dollar and the dollar index, you're absolutely right. Sterling's breaking to a fresh low. Pound yen is well above the lows. So the one that pushes into the extreme, is typically the one that's not going to be the trend that holds if the other ones continue to respect these levels. Didn't trust the sterling yen because of what sterling was doing. I don't blame you. But I try to take every trade on its own merits, right, Eileen? So looking for that drop towards 131 if we can get it, to see if we can find some support here in pound yen. Good questions, though. You got me all looking at that pound dollar now. Okay, we got a lot to cover today. We got a little held up there, so let's jump right through. Number 5, real quick, we're going to do a recap on dollar yen, and then we'll jump into the rest of the dollar crosses. Here's what dollar yen looks like ahead of NFPs tomorrow. So a quick segue before we jump into this. Here's what the expectations are. We got initial jobless claims, by the way, just ahead of the release, slightly weaker than expected. Remember earlier in the week on yesterday, we did cover the live release of ADPs, which also came in slightly softer than expected. Here's what that release looked like yesterday. ADP came in at 154. We were expecting 165. Again, take that for what it's worth. By the way, the ISM non-manufacturing composite, I don't know if you guys caught that yesterday after the webinar at 10 o'clock, 57.1. That's not the highest reading that we've seen, but this is the biggest monthly advance that we've seen, like in history. So it's sort of a big deal. There was a lot of highlight on that yesterday. Again, non-manufacturing composite is a really good kind of gauge of services sector sort of activity. Above 50 obviously indicates expansion. 57 would be a very, very strong read for the previous read of 51.4. Okay, so way surpassing expectations. Nice big run up from the previous month. Heading tomorrow, non-farm payrolls are expected to print at 172. That was off a previous read of 151. As always, we'll be looking at the labor force participation rate. There's been no expectations. I've been tracking this all week long. I haven't seen many forecasts for what labor force participation will be at tomorrow. Remember, if we see unemployment uptick to 5%, and this upticks, that's okay. If the labor force participation is expanding, inherently that'll tend to put some upward momentum or upward pressure on the unemployment rate, just the math of it. So with the same respect, again, if we see this drop to 4.8 and participation contracts, that's not going to be a positive thing for the labor market. So heading into the release, these are the expectations that we're kind of looking at. 172, unemployment at 4.9%, labor specifically on the private sector about 170 from 126. So we already talked about the fact that the dollar is already at resistance. The play for me would be to fade another high on a run higher. So irrespective of whether the data is good or bad, I'd be looking for a spike high, an exhaustion high in the dollar index to fade. Looking back at the last few October NFP releases, you could see that actually the dollar, even when the number was good on the first one, you did see a spike higher. This was 2014 rather specifically, and then it continued lower. Same thing with the last October read, right? So taking that into account, I want to be mindful of chasing dollar strength, like I said earlier in the session. So dollar yen looks like this ahead of the release. And here's what we look like last night. So the resistance level at 103.54. If you guys go to the previous update from earlier in the week here on the 2nd, that was actually the last level that we had cited for resistance. And for me, this was a risk for a pullback. I would have loved to get back on the long side at like 102.80. Bullish invalidation was 102 last night, down, here's last night's update, down here. But it just didn't materialize. You didn't get any long or short triggers worth of note. Remember, I'm very rarely going to try to short a trade. when the momentum oscillator is in overbought condition, because this condition can last for an indefinite time period. It's the break below 70 that would actually give us an indication that there's some sort of exhaustion. So not worth touching last night, but I do still think this thing risks a near-term pullback, and I do still want to get long. So next near-term topside target is just a soft target at 104. More critical resistance at 104.50 and 104.90, these topside levels here. And then you start to come into a little bit more stronger structural resistance for dollar yen. But you also had the 100-day moving average here. There's a lot to look at. So watch the close today. Again, not interested in new dollar yen long positions from here. But certainly if we do get a decent pullback towards that 103 handle, 102.80, I think that's an opportunity to get back on the long side. Any questions on dollar yen? Hey Conwall, how's it going, sir? No, I haven't covered crude or silver yet. We'll hit them in a bit. Just want to make sure we go through the dollar crosses first. All right. At risk for a pullback, still stays constructive above 102. Major stronger or more significant resistance, 104.47 and 104.92. Next up on tap, let's just hit them one by one. Number 6, we'll go over euro. Here's what the euro looks like. Okay. No change for the euro, basically, from what we've been talking about from the start of the week. As I noted yesterday, the monthly opening range is essentially set. The bearish invalidation, we're taking a neutral stance. The bearish invalidation would be right around here at the high day close, 112.59. Bullish invalidation, if we're going to break to the downside, is down here at 111.38. I know that we made a perfect tag of this yesterday. Okay, I didn't highlight it here on the scalp chart because I didn't want to target it necessarily on a intraday position, but you can see a basic 38.2 that has continued to hold, specifically on a close basis. Literally caught that low pretty nicely. So from here, looking for a break of this range and a final resolution for this euro-dollar move, favoring a topside break, but till we clear 112.59, it's going to be a range trade for me. Either we clear 111.38 to the downside, or we clear 112.55 to the upside. As long as we keep this range, that's what you treat it as. Now you can envision a scenario tomorrow where NFPs come out, dollar rips, this thing comes right into support confluence here with basic slope support and the lows from last month. Okay, that would be a stretch into like 111.23, just below, and then just kind of launches through. I could definitely see a scenario like that panning out, but the idea is, while above these slopes, which have continued to guide price action rather well here in the euro, you want to be mindful and looking for long entries. So the levels I think for the euro are kind of clearest, and while we hold a neutral stance right now, looking for the break of at least this initial weekly opening range, we haven't even cleared it. The favored topside move is still intact here. Nothing's changed on our focus on that. I know that swing trades are currently long. You guys have a stop below 111.20, which is the ideal level. That's the level I actually just noted, right here. 111.23, last month's low, median line support, and again, would be sort of a nice level of which you'd find some support, I think, on a drop there. Questions on the euro heading tomorrow? D, euro key, we'll take a look at that. Let me just get through the dollar crosses, okay? I promise I'll get to it. We'll run a little long today, even if we got to get to. But that's the euro. If there are no other questions, that's number 6. Number 7, we did pound. So let's jump into dollar CAD. a trade that we've been following all week as well. Here's dollar CAD trading at 132.03 right now. Kind of died out. We got a couple of short triggers, remember, or short plays this week off of this resistance level. There was actually another one here yesterday. Right after we spoke on the webinar, this thing ripped and tried to break through the highs again. Really nice spike high. Took another short on that. Would have been really nice for another play to the downside. But look, I'm starting to just focus on this basic trendline resistance here. Let me make it a little bit darker. More so than this median line formation at this point, okay, just because we've already tested it so many times. So once you start to lose efficacy in the levels, it's important to adjust. This is the level you need to break below to get the go on the low side, on the short side rather. This is the monthly open. They see in dotted lines, 131.20, basic trendline support. This is still the major key area of resistance near term, 132.25. So, a scenario tomorrow, possibly, where, looking at the daily and the 30-minute side-by-side, you see another spike high, run through, try to attempt to break through 32.50, failure, and then maybe a pullback on some dollar weakness. Would certainly coincide well with the CAD strength that we're looking for on this move specifically. And broadly speaking, if we do spike higher, as long as we stay below 32, let me just take a step back. Do you see how many times, guys, this thing has tried to clear basically a close above 32? We only got one day. You have the 200-day moving average in there. It's just been an area of frustrating resistance for dollar CAD for some time. So even if this spikes higher tomorrow, you know, the validation for the breakout in my mind doesn't happen unless we close above 32.54. All right, that's dollar CAD heading into NFPs tomorrow. Keep in mind tomorrow is a double whammy. I almost forgot to tell you that. Double whammy for CAD employment as well. So we do get the unemployment numbers from Canada, expected to hold at 7%. Net change, only a gain of 7.5 thousand. You know, we had a nice print last month of 26.2. Participation rate doesn't play as larger a role, but certainly something to look at. That's expected to hold at 65.5. So these days, these Fridays, when you get NFPs alongside CAD employment data, can really charge some radical volatility in the dollar CAD cross. So definitely something to keep in mind tomorrow. They're released at the same time at 8:30. So just keep that in mind. If you're trading dollar CAD, it's not going to be reacting just to the non-farm payroll release. All right, Aussie dollar, number 8. So, first area of support being checked right now. 100% extension off the high gives you 75.70. A nice pivot just from a few weeks ago gives you 75.73, 75.73. Yep. And we're testing that region right now. Momentum. It's not the strongest divergence, but it is divergence nonetheless. It's continued to hold the lows as price action has made a lower low, and a lower low. Remember, near term, 75.45 is sort of the bullish invalidation level. So if we do get a spike into this region, I would be interested in possibly trying to fade that move near term. That would be on a dollar weakness story. With the only thing that would really shift sort of the focus would have to be like a move down past 75 in general. But I'm broadly looking for the Aussie to start finding a little bit more of a support hold within these levels. Bear with me one sec. I just want to see what this looks like. Something to consider. Highlights that region yet again. Heading into tomorrow, maybe a scenario again where you see real strong initial dollar reaction taking to the support, maybe an opportunity to fade. 75 being the key structure of support so far near term. So levels on Aussie haven't changed from earlier in the week. Okay, so same levels, no change. We're right down here right now, 75.70. So could get a rebound off this level. One thing I do want to note to everyone in the room, today's trade action, I don't necessarily want to limit myself because of what's happening tomorrow. If we do get some opportunities to rebound, Kiwi CAD, pound yen, if we get that support, I got no problem taking a position heading into tomorrow. It's just watch your position size heading into the release. If you are in the money, typically I'll look to take a little bit of more leverage off that position, open up your stops a little bit, give yourself some breathing room. But if the opportunity presents itself and the triggers are there, don't shy away. Heading into Asia tonight is where things will start to get quiet. You'll get the market lull. Things will go into just complete oscillation mode, and that'll probably last the majority of the session heading into the U.S. Open. So U.S. trade today is still on the table for me, at least, for intraday positions. All right, that is Aussie. We did yen, euro, CAD, Aussie. Let's touch base on Kiwi, and then we'll jump into euro Kiwi for UD. Kiwi dollar will be number 9, excuse me. Here's what Kiwi looks like right now. So while we've continued to favor the short side, there hasn't really been an opportunity to get in a decent position, even from a scalping basis, just because the session highs have been sort of really tight. I guess on a rally back into the U.S. opening range high would have been a decent stop against the European high, but even then the range has been contracting so tight. If we take a look at Kiwi dollar ATR, okay, it's currently showing only 20 pips. So it's a tough sell for me, even on an intraday position, to get involved with something like this chopped near term. That being said, I don't really have us at support right now. The support I was looking at was 71.54. If we pop back through the Asia opening range high, you might get a rally which could offer us repositioning on the short side. But I'm hairy. It's a hairy level down here as well. You have that 618 retracement of the entire advance. That's 71.54. The 100% doesn't come in until 71.18. So we're right here. Who was holding a position? I think someone was asking about this in the webinar yesterday. And we were kind of looking for 71. Oh, D, it was you. You were trading this as well, right? Yeah, so 71.55 was the level I was looking for, 71.53. We did hold that into the close of U.S. trade all night long in Asia. Here's early, or midday in Europe, and the break lower kind of stalling out. I don't want to chase this, and you're getting divergence into those lows, okay? So, I'd need to see a break above the opening range high, and might be an opportunity actually to scalp this back for a rebound. Specifically, if the dollar pulls back, that would be a decent play. But while below this level, I don't really have an interest for any new positioning. Okay, levels remain unchanged. So the Kiwi levels remain unchanged. Okay, we're trading right here. I would lower, by the way, the near-term bearish invalidation from 72.54. I would lower that now. I would lower that now to basic just channel resistance here. As long as we hold below that, you want to keep that focus to the short side. All right. Any questions on Kiwi? D says, I am short at 72.95. Okay, so you're still in that. Sweet. Your next target, 71.19. If it pops through the Asia high and the London highs here, I would expect to see more of a rebound towards that 72 handle again. So play it at your will. I was reading other traders' targets at 70.20. Does that sound right? All right. Well, it sounds to me like you're looking for a longer-term stance on this, right? Let me take a look for you. I like the 70-20 area as a level of profit target for a longer term position just based on slope. You see where this slope is right here off the lows? Right now, that comes in right around the 70 handle. So over the next few days, yeah, a profit of 70-20 is where I'd start to book some profit. Yeah, that would make sense to me on a longer term position, sure. Sure. And this outside day reversal that we made off of resistance and the high day close, again, from back here, certainly is something that is a bearish development. We noted that earlier in the week, right? So yeah, I like that on a longer term stance. It's just in the meantime, D, don't be surprised if this thing rebounds a little bit and takes a little bit of a pounce against you. I think the longer term play here is still, you're right on view. From a scalper standpoint, or near term intraday trading, we'd be looking for re-entry on a rally towards 72.20, and again, the downside targets remain unchanged. But yeah, 70.20 would be a decent area. Actually, on near-term slope, if we just take channel support of the current operative slope, 70.20 is actually a really nice area. Does that make sense? 72.20 is Jamie's short entry limit. Oh, is it? Well, great minds think alike. What can I tell you? Okay, thanks. Please recheck my new stop at 72.30. Yeah, watch the slope. Watch the slope. I think you can lower that stop, D, as we get further deeper in time. But right about now, yeah, 72.30, 72, thereabouts would be a decent area. I mean, it depends when the market reverses. As it stands right now, it's a little bit higher than that. But yeah, in time, I'd be looking at those swing lows from last week. Basically, this barrier I still like a lot. There's a big Fibonacci confluence here. The 50% off the low, the 618 off the high, and obviously just a basic pivot in price. Look at this. So just keep that in mind. But yeah, I mean, next soft target 71.18, 70.68, and then that 72 region would be a little bit more, or 70.20 region, excuse me, D would be a little bit more of a critical structural support, right? So hope that helps. D says, okay, thanks, more than welcome. Looking forward to hitting it. LOL, says Kelly. You're talking about Jamie's entry. Yeah, I love the position. What can I say? He's right on target there. We're all looking at the same thing. It's always good to get validation when me and Jamie's levels just fall right on each other like that. So, any questions on Kiwi dollar before we move off? That's number 9. All right, so we've covered all the dollar crosses, unless anyone's got a question on dollar Swiss for some reason. But let's move on to the question here for D, who wants to take a look at Euro Kiwi. So here's what Euro Ki looks like. And I think we talked about this yesterday in the webinar as this thing was approaching this 100% extension from the advance off the lows that we made here. I think that's where we were yesterday, right? Just ahead. Actually, we were just testing the weekly range highs from last week. So we've now completed 100% extension. This slope does look like it could be in play, and that sort of converges just higher here. We haven't quite tagged it just yet, but it's an uptrend at near-term resistance, D. I'll like it higher while above 54.70 still, which is the objective opening range high. Let me see if this slope plays out. All right, nothing really to do with it there yet. Oops. D says, where would you have a stop currently, please? Well, it depends where the entry is from, D. Where are you holding entry on that? My focus would be higher above 54.70. So as long as the price stays above this region, I'd be looking for long triggers. The only thing that would make me bearish would be a break of the weekly opening range low, which coincides with slope support right now. See, that's the way it really, guys, it's very important to keep in mind what approach you're trying to take on the trade. For me, for an intraday standpoint, there's a level of which I want to be looking for long triggers. Below this, I don't necessarily want to be short. I'm kind of nothing here, right? This is what would make me wanting to look for shorts. So there's kind of always a region of no man's land for me, where if we're in this, I kind of don't know what I want to do. But I would stay constructive above 54.71 on a trade like this. You have an entry at 53.50. Okay, beautiful entry. Again, I would play it close to the chest, D, but that's just me. I would have a stop against 53.10. Slope support there. A topside breach objective from there. I mean, this is a pretty big level of resistance. Even look back here to the highs that you made back on this August swing. Really nice pivot. Resistance, support, support, support. Oop, I'm sorry. Resistance, 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 support. Okay, so nice little pivot in price. Median line resistance, constructive above support. You got a beautiful entry on it. That's what I'd be looking at. I mean, if you don't want to take a stop too far away than that, like I said, the monthly open would be first area of which I'd start to get concerned. You know what I mean? That comes in at 54.10. If you're trying to play it close to the heart or close to the chest, yeah, 54. She's saying 54.45 D. Now sounds okay. 54.45. Yeah, I mean, it doesn't. It would lock in profits, D. It would definitely lock in your profits. You might get an opportunity to get back in on the long side. But that's just my initial area of support. I'd hate to see you get stopped out on a dip into this region, then rip higher. If anything, the opening range high for the week is a little bit more solid of a higher resistance structure for me. Absolutely. No one ever went D, no one ever went broke booking profits, right? That's my motto. Cheers on that. I hope that helps. That's Euro Kiwi. I do want to also take a quick segue to Euro Yen, which is a trade that we highlighted also earlier this week. Here's what Euro Yen looked like back on the 4th. So we're trading right here, right now. Our bullish invalidation level was 47.72 or near-term support. At this point, I just want to highlight that you want to bring that level up to basically here. Last month's open is about 115.40. You have former trendline resistance, which we did get hung up on here for a couple of hours before breaking, and the median line for the current operative structure. So watch that level comes in right around like 115.40, 115.45. As near-term support if the Euro-Yen advance is going to continue on course towards that 117 target. So no change to the levels there on Euro-Yen. Just want to give you a quick update. You want to raise that level now to basically right here where we were holding as resistance earlier. Any questions on Euro-Yen? Nice, we made it through them. Let me know if you guys have any other questions or specific pairs you want to cover. Conwall, I haven't forgotten about you, buddy. Here's the commodity block for you. So keep in mind you have some nat gas inventory numbers coming out later today in U.S. trade around 10 o'clock. Here's what oil looks like. And the breakout continues to push higher. 2016 high day close on tap, right or higher around 50.41. Okay, this is the high day close for the year. The high for the year actually comes in at 51.64, but no change here. Conwall, no change. I would say, look, you want to stay, broadly, this is the key support structure that you need to clear to get back on the bearish side. As long as you stay, you don't even want to get rid of that high day close now. As long as you stay above the monthly open, which comes in at 48, you want to be wary about trying to short this. Conwell says, I am short in silver, covered one lot, 1726, waiting for another at 17. Okay, I'll take a look at silver shortly. Conwall, are you holding anything on crude that you want to discuss? Or you just needed the levels? Because I wouldn't get in the way of this. I think you could get a pretty. Oh, he says no, sir. Right on. Yeah, I think you can get a pretty wicked pullback tomorrow, especially the dollar snaps. But you know, above 48. Just keep in mind you're above structural resistance for a formation that's dated back, you know, for over a year. So this could be a little bit of a bigger deal. Now, as it pertains to let me go over gold real quick, and then we'll touch base on silver. As it pertains to gold, that's Swiss. Oh, by the way, just on a quick side note, it was funny that we laughed about Swiss earlier. Swiss yen is making some possibly a pretty big move here. This is basic trendline resistance dating back to the high that we made back in December of last year. Now you have two touches on this trend line, but if you take a parallel off that high that you made in April of this year, that's got three touches. That broke. Okay, this slope off the lows seems like it could be in play. And broadly speaking, you know, if this is going to be a breakout, you want to stay constructive above 104.31. So on a move into here, you'd want to see some support on a possible stretch as high as an initial target. Just the initial target takes you up into 110. So look, I'm never going to advocate a Swissy trade because I just don't trade Swiss. But I did want to highlight this on account of what we're seeing in the yen crosses, you know, kind of giving us a little bit more validation that there may in fact be a broader shift here in what's happening on the yen crosses in general. So we are testing the highs from last month. You just want to be mindful of that. But broadly speaking, you know, once we clear this initial resistance range, if we hold support above this, it's a pretty big target way up here. And over the next couple of days and weeks, you'll have that 200-day moving average sneaking right in there as well. So possible something to keep in mind here. That 50 lines right there too for Swiss yen. Put that on the radar chart maybe next week. Okay, gold. Here's what gold looks like. Not much to say here, Conwall. Not much to say. 1250s, last thing I'd even look at. But this does look like pretty dramatic price action here that you don't necessarily want to get in the way of. A snapback resistance isn't really up until 1287 again, or at least more significant resistance, I would say. Next support of any type of significance is 1250, and that's a 38.2 of the entire advance from last year's low. So wouldn't necessarily touch gold by any measure here. Silver is a little bit of a different animal. Here's what silver looks like. And that breakdown is coming into a little bit more of a comfort zone for me just because of the structural support that we're in. Remember yesterday we talked about 1740 and how that's pretty much a price you're likely to see this gravitate to. We got it. It's right here, right now. You have structural support just below. Over the next few days, the 200-day moving average will be approaching, and then you have that clear pivot in price, if you just look to the left there of my cursor, from back in June. So largely speaking, this is still the zone I'd be looking for this thing to possibly find a little bit more of a support hold, not by any means a call to go long, but certainly something if you're on the short side, you'd want to be curbing some of that appetite. So as far as Conwall, your position that you're short in silver right now from yesterday, right? I think you're still holding that position. 1756, awaiting for another at 1717. Is that okay, or close the position? 1717 would be is that the 200? Just ahead of it? Let's see what the near-term picture looks like. Listen, I would say this whole zone is fair game as support. So I'd hate to see you get wicked out and this thing reverse just over a couple of cents. So I would say watch this near-term price action within this range closely heading to the U.S. Open. There it is. You know, it's a pretty big Fibonacci confluence, as I noted yesterday, the 100 and the 50. You're getting divergence into the low here, so Conwall, that could also be suggesting that near-term momentum is starting to wane. Whoops. Remember, as we said yesterday as well, the downside break of a descending channel formation, typically the sharpest part. I think that's again manifested itself here. Clean this up at this point. Let's hit the hourly. Yeah, I can't tell you exactly what to do on this Conwall. You're going to have to assess the risk as per your account here, but I would say, you're at risk for a little bit of an exhaustion. It's still a downtrend, so if you have a really good entry on that, I wouldn't be too concerned as long as you stay below like 18. But as it stands right now, you're getting waning momentum. It is holding a near-term fib confluence. You could see a dribble down lower, but I'd be a little bit more hesitant to take an aggressive stance. Does that make sense? Let me just copy this for you here too. Basic trendline support, just lower. Okay, so watch this section, this range right here. All right. He says, yes, sir. All right, cheers. So guys, that's gonna wrap it up for today. The U.S. Open just came online 3 minutes ago, so I'm gonna jet. I want to wish everyone best of luck trading tomorrow, and we will pick things up again. Remember, on Monday we'll be on Daily FX for the free weekly public webinar, and then back here on Tuesday, Wednesday, and Thursday. Take it easy heading into tonight's session. Again, the lull starts in usually around Asia. You start to see things flatten out. Vols go a little bit lower. And again, dollar CAD, remember that specific dual release with the NFP report and CAD employment is likely to be a pair to look at tomorrow as well. Best of luck trading, guys. Eileen, Trevor, I appreciate that. See you guys next week. Cheers.